It's your trade of the day. Normally the trade of the day is one where like, yeah, good trade, right? We talk about that, our winners, and what we do best here is also talk about our losers. You got to stay humbled and you got to make sure that, you know, the trades that you're looking at still make sense. I can't tout the sticky note all the time and not look back at it and do something like this. So here, we're going to go with gap today, right? And just as the note said, we were going to use $10 as resistance, right? They had a horrible guide. They should be lower, but remember when, like we wrote this at 8 o'clock. The next note here is 13% short, and what does this say? Could spike stock early. So we were already sort of waiting for this move to happen, but I cannot avoid getting into gap, right? And so we wanted to be short this name. The sticky note talks about the spike early, so this is what we're doing. Let's review. Why did we take $10 short? We just wanted, it was basically just a psychological level. I put this here. There's nothing yesterday that would tell us 10 is key. Up here is 11. So this little line there is 11.20. This is 11. So the bottom yesterday was 11. We were just using 10 as a psychological level because when it falls back down in, you're down near $9 here. So in the pre-market, you're trading sub 9, all right? We start the short as it comes back up. Then we're using some of these levels from yesterday, you know, 9.30, 9.40, 9.50 to start to build the trade. But what happens early? It doesn't open right away. You can see the market actually doesn't open till about like 9:33, 9:34. They're settling down orders. So we kind of sniffed out that there might have been a problem with this. So we're starting to go short, and we do have some outs around 9.50. However, as soon as the market opens, and I can't remember the last time we saw like a big name like Gap halt, basically on nothing except for volatility to the upside. So here it is, it's hanging out, then bang, it just rips up in one candle from basically 9.50 all the way up there to 10.20 and halts, right? At that halt, as soon as it halts, we're getting out. The good thing about all of this trading is that we respect our very own levels here, where we say use 10 as resistance and to get out. So that's exactly what we wind up doing, and we get out when it breaks through 10. So the halt that happens, I think it was like 10.15 or 10.20, I can't remember the exact price, but we're out of the majority of them, and then we just punch out the rest when the halt happens. It reopens back up, and we immediately take the short. Then it starts to fall. We start to get some out for 20, 30 pennies, but it doesn't really matter because honestly, we've already lost a whole chunk of this, so we're getting out and holding a small piece. It rips up to the upside. We're able to see another short ahead of 11, so that's the next short ahead of 11. That falls down, and that's just profit taking. So we're making money back, making money back. Then all of a sudden, we were actually in a meeting, some kind of size, I don't know what it was, I think it was 600,000 shares or something like that, showed up here on the bid and basically marketed itself all the way back up. So we wind up getting out of the rest of our short that we had here at 11, and we get out at about 11.10, which is fine. That's the market rate back up, drops back in, then we get the rest out there at 11.10 for flat, as you can see gap on the way up. But the story of the bottom line here, this story, is that, look, you got to respect some of your levels because we wanted to short gap. So we did that. Like we're on a great, we're 4 for 4 this week besides today on some of these plays, right? So it's a nice move to the upside. We get blown out off that 13% short, I feel like. It wasn't a great quarter. Does it deserve to be up 2 or 3%? I don't know. The stock market's saying it is. So, but look what we avoid. It's up to 11.50. So if we were married to this position and in it all day, then yeah, this would be a problem. But you gotta, Brendan, have your outs, and traders, you gotta have your outs at some key levels, because if we don't identify 10 as a problem, then all of a sudden I'm short 9, I'm short 9.50, I'm short more at 10, then I'm getting mad and I'm short at 11, and then this happens, and then, you know, so I don't have to make those decisions. You stick with your goals, stick with your gut feel, respect levels, and you'll be fine. It's a losing trade here, but I think I learned some lessons, and I hope you did too with the trade of the day.